All right. Well, good morning, everyone. Thank you for joining for this webinar today with the San Diego North EDC. We're excited to bring this and a number of other programs that we've got planned out for the rest of the last part of April and the first part of May to help assist small businesses throughout San Diego County. San Diego North EDC is a public-private partnership. We've been around for just about 30 years, and we focus on economic development in North County. By that we mean we work to market the region for inward investment. We work with existing employers to help them solve challenges such as what we're doing here today, and we connect companies and educators to build a more resilient workforce. With that, I'm going to introduce our speakers today who are going to talk about really how to think through your businesses for PPP. Again, we're going to have about 30-40 minutes of presentation, and then we will be taking questions and answers in chat. We are joined by two CPAs from Polito Eppich, which is a local accounting firm here in North County, San Diego. Paul Polito is a partner with Polito and Eppich, and he resides here in North County. He has 5 children. We were joking about it at the beginning. He wishes a couple were home to help with IT challenges. He has been with the firm and in public practice in accounting for over 40 years. He currently volunteers for the following organizations: Interfaith Community Services, New Haven Youth and Family Services, Trade Tech High School, and JP Catholic University, along with State Stephens Catholic Church. Jessica Dorsett is also with Polito and Eppich, and she is a CPA. She graduated from the University of San Diego with a degree in accountancy in 2018, was promoted to partner, and at the end of 2019, she made the transition to head up Polito's tax department. She also is our accountant and does great by us at San Diego North EDC. She and her husband, Brett, are raising 3 children in North County. And she is treasurer of the board of the North County Philanthropy Council. I think they're just really, really special people. And I was particularly taken, and we'll get that out to everybody, with a memo that they put together, which I thought was really smart on how to think through PPP disbursement. Again, we'll be sending that out to all the participants at the meeting. So with that, Jessica, feel free to begin.
All right, I'm going to do a quick screen share. Give me a minute. Okay, is this gonna work? Great. All right, so just for anyone who joined in late, this is being recorded, and if you have any questions, please put them in through the chat, and Eric's gonna be monitoring those for us and helping compile and ask those at the end. And if you haven't done so already, please make sure you are muted. All right. So first, we wanted to just kind of start with a big overall theme here. As a reminder, priority 1 is really to keep your business operating and in business during this crisis. Loan forgiveness is a great benefit here, but it should not be the main objective. We've had many clients call thinking, I need 100% of this forgiven. And while that is great if that can be achieved, your common sense business practices should not go out the window just to make that goal achieved. So we've got to keep in mind working capital will never be as cheap again. It is a 1% loan for any part that is not forgiven at the end of that 8-week period. And we'll go through that in a little more detail. But just do keep that in mind. The health of your business needs to be at the forefront of all of the decisions you make during this period. And Paul, before I move on to slides, do you have anything on that one? I can't.
Yeah, just to reiterate what Jessica just said, anything that rolls out this fast, there's going to be some issues, and I just have to say that I am really impressed at how the government came together, as fractured as it is, to put this thing together. You know, in the beginning we had the EIDL loan, which was established by executive order, which is the only thing really anything can get done quickly. It has to be that way. Followed by some more funding for that and the PPP loan program, and then it got refunded again last week. Anytime something like this comes out, this massive and this fast, there's going to be hiccups. And, you know, you got to remember the public servants that are working at the SBA are just like us. Some of them are working from home. None of them want to get the virus. They've got all the same challenges we do, plus an unprecedented job to do. Same with the banks. You know, the banks are working 24/7 over the Easter weekend. I'm pretty sure they were working 24 hours a day, getting loans processed and approved and to be into the SBA for approval. There are a lot of questions about loan forgiveness that are unanswered at this point, and they're unanswered because no one can get to them. They're too busy getting the loan funds out. They're still processing the second tranche of funding. And until that's done, and probably until the funding stops coming, they won't have time to work on frequently asked questions. They're putting out frequently asked questions about every week, but they really haven't addressed much on the forgiveness side, because right now they're just concerned about meeting the objective of the legislation, which was to keep this economy from crashing and to keep people working. And so, you know, there's been some hiccups. Some folks that have applied for PPP loans are finding out they really can't use the money the way they're supposed to get it forgiven. And maybe there could have been some better education up front, but be that as it may, we have to deal with the situation we're in.
Thank you. All right, so in this presentation is meant to really kind of address best practices of how to deal with this 8-week period and how to try to maximize loan forgiveness based on what we know now. So we're not going into great details at this point, but happy to answer questions on those later or offline if needed. So the key here is you've got this 8-week window. The day the funds are deposited into your account is the day that 8-week window starts. It cannot be shifted by any means. So you've got to have a plan in place and start working on it right away. There's really not a lot of time to kind of to drag your feet on this. I'm gonna skip to the second. So we've got this 8-week window, which you're gonna wanna create maybe a budget for, right? So if you look on the right-hand side of this screen here, 75% of the loan funds need to be used for payroll for the amount that's forgiven. So if you've got less than 75% or more than 25% is used for non-payroll funds, that's gonna reduce your loan forgiveness portion. Qualified payroll costs is critical to understand. This is your gross payroll, which is capped at $15,384 per employee for that 8-week period. That is based on an annual salary or compensation of $100,000 for the year. So basically, if you do the math and reduce that down to an 8-week period, that's the most you're going to be able to pay an employee for the forgiven portion during this 8-week period, plus state unemployment insurance, less any payroll tax credits taken for any of the required COVID-19 sick and family leave. So because that is basically paid for by the government, you cannot use that in this calculation. So you reverse that out. So on top of that maximum payroll cost, then you're also able to include your qualifying benefits, which are health insurance and retirement plan payments. So if someone has hit that 100,000 cap on an annual basis, you're still able to add these on top. It is not netted together. So those are your qualifying payroll costs plus rent, utilities, and mortgage interests, as long as the agreements were in place prior to February 15th, the contracts that were in place before that date, then payments on those obligations do qualify for the loan forgiveness. One interesting thing is that the Act allowed for payments on interest on other debts, not mortgages, that were in place before that same February 15th date, but they are not included in the forgivable portion of the calculation. So while permitted use of the loan funds, it will not be forgiven. So what do you need to do at this point? Once you've got this 8-week budget in place and you feel like you know what you're going to be able to spend this money on, here's some best practices that we're recommending for our clients. Documentation is absolutely critical in this. You've got to make this as easy as possible for your banks to process your loan forgiveness request and get it through. So we're recommending that you may want to consider holding this in a separate bank account. This would help avoid the issue where it goes, because it's going to be deposited into whatever account you give the bank, which may likely be your operating account. What happens if that gets funded on April 30th, for example, today, and maybe you've got a slew of payments that automatically come out the very next day? Potentially you've just jeopardized the use of those funds depending on where your cash balances are. So maybe move that straight into another separate account that's not used for any other purpose, and just continue to pay your expenses using your regular operating accounts, however you normally do it, whether it be through a credit card or your checking accounts or online, whatever it might be. But once you've then spent those monies in their, that are qualified, then you would release those loan proceeds from that separate bank account into your operating account. And you would want to, penny for penny. You've got to have like perfect audit trails here. If you have a system like QuickBooks where you are able to set up a separate class system, for example, to track these funds, or some sort of fund accounting system, we encourage you to do that, because it's just, again, an increased audit trail to show that you've used these monies exactly as they are permitted. Keep all invoices, all payroll journals, cancel checks. A lot of people don't get canceled checks anymore. You may want to go into the bank and get those canceled checks. You want every piece of documentation you can have to support this.
Comment. The Act prohibits any debt discharge on this program without documentation. The banks have 60 days from the day you give them your request to process it. There's going to be an unprecedented difficulty here, because banks are not staffed to audit loan forgiveness requests. They're built around loans, and a typical loan volume might be, in a small bank, might be 2 or 3 a week. And you're looking at banks that are used to doing that kind of volume that just put out about 200 loans in a week. So when you just think about the practicality of this, the easiest way to get it forgiven is to document everything. And that's why we think this separate bank account is a really good idea. Documenting the expenses is a really good idea. We're still unclear on some of the rules around these expenses. As stated previously, we're going to have to wait. But again, put the business health first. And it may not be, you may not want to spend 75% on payroll. You might have other issues that are legal to spend this money for, like rent that's behind, or mortgage payments that are behind, or anything else that's allowed that are behind, and just forego some of the forgiveness. But it's very, very important to document everything. If you don't, it's going to be very hard for the bank to process your application for forgiveness.
All right. So getting into the calculator itself, there are a few calculators available online. And they really are all based on what we know right now. So do keep in mind those things can change as we get more clarification from the SBA, if any. But also work closely with your bank as they start to get more information on this so that you're in the loop. But in general, there's a few things to be aware of what will reduce the forgiven portion of your loan. The first is the salary reduction issue. So any employee who made less than $100,000 in compensation in 2019, if you reduce their compensation by more than 25%, then there's a I'm not going to go into the complicated calculations, but that will reduce the loan forgiveness. If your employee makes more than $100,000, it does not matter how much you reduce their compensation. They're completely excluded from this piece of the reduction. There's also a reduction for the count of your FTEs, or your full-time equivalent of employees. So you look at the number of employees during the period, and you compare that to either the same period of February 15th, 2019 through June 30th, 2019, or January 1st, 2020 through February 29th, 2020. And again, it's a very complicated calculation, but the calculators are out there to kind of help you through this. If you have a reduction, then there's a calculation to reduce the loan forgiveness, and you're able to choose the more favorable period. That's our understanding at this point. When you look at the act is a little bit, kind of outlines it a little bit differently than some of the information coming out. So we're kind of just going with this at the moment.
Can I make a comment here? As Jessica mentioned, the ACT and these calculators that we're seeing that mostly are developed by law firms are different. And it could be there were some drafting errors in the ACT where there are some conflicts. It's a 900-page document. I've gone through some of it, but I'm not a lawyer, and it's our busy season. I don't have time to read 900 pages, but other people have, and they've come up with these periods. The other issue that comes up is, how do you calculate FTEs? And there's no guidance in the ACT that anyone has been able to find that I've talked to that'll tell us whether you use 40 hours, 32 hours, 30 hours, what exactly do you use to calculate full-time equivalents? Certainly we'll be getting some guidance on that. At this time, probably use the most conservative number to calculate your FTEs if you're trying to maximize the forgiveness. Go ahead, Jessica.
Other factors that will reduce the loan forgiveness. As previously mentioned, at least 75% of the forgiven portion must be used on qualifying payroll costs. Any amount spent past that 8-week period will not be forgiven. So it's not that you have to spend it all in 8 weeks, but that is the period in which the forgiven portion is calculated. Interest payments on other debts that are not the mortgage debts that we previously mentioned. If you received an EIDL loan and you received that $10,000 forgivable grant, that is reduced from your loan forgiveness on this PPP loan. And any non-qualifying expenses will need to be repaid. We don't know if that needs to be repaid immediately or if it will get wrapped into the 2-year payment term. But I would be prepared for immediately in the event that something like that happens inadvertently. Paul?
Nothing to add to that.
Okay. So here was a snapshot we took of one of the calculators that was forwarded to us from a client, actually, that we thought was pretty useful and friendly. Again, you know, there's in one of the PDFs that we're sending you, there's a link to a law firm's calculator on there that you can access. Otherwise, maybe reach out to your bank and see if the vendors that they're using to process these have anything this happened to come from a vendor of one of the banks that they're using to process the loans. You can see, you know, there's just the various calculations that go into the possible reductions on the forgiveness. So a quick reminder, there were a lot of benefits that specifically related to payroll that came out of both the acts that came through. So both the CARES Act, which is where the PPP loan came from, and then the Families First Coronavirus Relief Act also provided a lot of credit. So you can only pick one. So if you're using the loan forgiveness portion here, then you need to make sure that you do not use the employee retention credit, which is not the same as the COVID-19 credit related to required payment for sick and family leave. That is completely different. The employee retention credit is unrelated to that. And then also, you cannot delay the deposits of your employment taxes for federal purposes, which, you know, you're able to do if you're not using this. So make sure you keep paying all your payroll taxes on time. And then here are two websites that you may want to keep an eye on. The Treasury Department one is probably the most useful, and I'm going to just jump over to that real quick. Whoops. They are continually putting out information, and there's some Q&As that let me just get to real quick. That help answer a lot of specific questions. Now, a lot of the initial, like Paul alluded to, a lot of the initial information and guidance given out has been more towards the actual application process and, you know, just this first part of this whole process. So we expect more to come out, in particular regarding the loan forgiveness. So I would recommend you regularly visit this website and keep an eye if they've got things dated to when they are updated or posted, so you can take a look at those regularly. So at this point, we will jump to questions. There were a few questions that were submitted prior through email, so we thought we'd go through those first while Eric sorts through anything that's been submitted at this point. A few of the questions should have been answered through this presentation already. But Paul, do you want to answer? So one of the questions, are monthly union benefit payments covered in payroll costs?
Okay, so in my travels through the Act, I did see where union benefit payments are included. I wanted to go back and check that because those benefits would have to be specifically health insurance, so the health program and the retirement program. I could not, after I saw this question, I thought, well, I better go back in the Act and see where I could find that. Well, going through the 900 pages, I tried to word search it and all that. I couldn't find it. So, you know, when I did read it, I noted that union benefits were okay, but it was in the context of this Act, which means just medical and retirement. And I'm fairly certain that all those union contracts spell those dollars out in the hourly breakdown that you're paying. Another question that came in from the same party was, is workman's compensation covered? No, it's not. That's actually, when you think about it, that's insuring a disability, but it's not, and it's wage replacement, but it doesn't get covered by this Act.
All right, so one of the questions was with regard to the remaining balance of what's not forgiven. So as kind of previously mentioned, what you'll do is you'll submit in a form or an application of sort to your banker with the calculation of what you're requesting to be forgiven. And once that is approved, then whatever is not forgiven is what's remaining on your note. So when you received your PPP loan, you would have signed your promissory note with the bank. day one is when interest accrues. Keep that in mind. Whatever is forgiven, interest related to that forgiven portion is also forgiven. So what's remaining is the principal amount that will be at 1% interest rate and due within the 2-year period from the day of the signing of your note. And then, as far as furloughing employees, so Paul, any thoughts as far as if you're furloughing employees after the 8-week period?
Well, they're allowed to bring the employees back up until June 30th.
So if you keep them on board during the 8-week period and then have to furlough them?
If you
after?
Drop them after the, June 30th?
Or after your 8-week period is up?
I would expect that there's probably going to be some rules that don't exist yet that are placed on that, but I don't know. I don't think anybody knows. When you think about the sheer volume of this, there's only so much time they can spend on these details, and they're certainly going to try and prevent people from just laying folks off. But no one knew going into this how long we were going to be down as an economy and how fast we would come back up as an economy. And if we can learn anything from the way that the process worked on the front end with the SBA, they were kind of making the rules up as they went along. And I don't say that carelessly. I think they did a very good job. They were very thoughtful, and the Act gives them the authority to make the rules up as they go along so that it can be implemented, because, this is a monumental task, and they're going to probably make some practical, expedient type rules for the forgiveness so that they can process these things without going through hours and hours of auditing. And that's, again, why we recommend very strongly that you keep copious records, because these banks aren't used to this, and they're going to want something they can hang their hat on because they're responsible, and they're not allowed to put forth any proposed forgiveness without documentation.
So Paul and Jessica, I'll read a couple of questions out of chat for you. The first, we have a number of questions that relate to either the kind of the calculations. Let's see. I guess the first one, which is easy, let's just start there, is can you quickly go through and sort of lay out in simplest terms how things are going to be counted for an employee who makes over $100,000? So is any portion of their payroll costs forgivable, or is it just the compensation over $100,000 that isn't included in the calculation?
Just
so in other words,
it's over 100.
So if an employee makes 105, 100,000 can be forgiven, 5,000 cannot be. Is that correct?
Right. So basically, when you put your numbers together, you're gonna, anyone that's over $100,000 a year, you're gonna use that $15,000 figure that Jessica gave you in the slide as the max for that employee.
Great.
And
thank you.
So you don't automatically count your whole payroll. That's why just literally every payroll, you're going to have to go through and create some sort of an Excel spreadsheet to tell you how much of the funds that you spent were allowable. And anything for people over $100,000 a year is not. You're going to have to limit it to that $15,000 number.
And keep in mind that compensation includes your base salary, bonuses, commissions, things like that. So if you need to add some of that in, you're still going to use that 15,000 max. Another thing to keep in mind is that the Act is written to say that it's based on expenses incurred and paid. Kind of hoping for some clear, make sure that everyone's on the same page on that, but incurred and paid means the expense has been incurred and you have paid it. So if it's been accrued but not paid within that 8-week period, you may have a problem. If it's been paid, but you're like prepaying a June rent, for example, that may also be a problem. So do your best to try to keep within that guideline.
Comment here too, as we stated, first and foremost, you have to put the health of the business first. It may be that you need to let someone go permanently. And one of the things that you can include in this is severance pay. And so keep that in mind. If you got to trim your team and you need to terminate somebody, what you pay them for their termination is includable. Including
their accrued vacation time, if any.
Okay. So we had a couple questions that were related to the 75% number. So can you increase the company contribution toward health insurance, or can you pay out bonuses or change compensation so as to hit that number or get closer to that number? Do we have any guidance from Treasury yet on how they anticipate that working?
You want to take that one, Jessica?
I'll let you.
Okay. So keep in mind, you've still got these maximum amounts payable during that 8-week period. So you first want to look at, okay, the most I can pay any person is that $15,000 figure. If you're looking at paying somebody if let's say you cut someone's pay and they made under $100,000 a year. I mean, a lot of companies put across the board pay reduction to 10%, or maybe it rolled from 25% at the top down to 5% at the bottom. But whatever you did, if you want to restore that, this is a good time to restore it. So you can use the forgiveness portion for that. But again, limited to that 15,000. One question that came in was, well, I haven't paid myself from my S corporation since February. What about that? And I think you still, as long as you stay under that $15,000 cap, you can catch up, or you can catch up to that extent during that 8-week period.
Any guidance that you've heard from partners in the banking sector, in addition to creating that audit trail, that are suggested documentations that you're advising your clients to create or retain?
Well, the Act states that you have to have payroll tax returns. Now remember, no payroll tax return is for an 8-week period, so it's going to require a worksheet to reconcile your 8-week period to your actual payroll tax returns, but that's going to be necessary. That's probably going to be the linchpin of the forgiveness application. You're probably going to have to demonstrate that you had a lease in place on February 15th, 2009, if you're including rent payments. You're going to have to demonstrate that you've actually paid the medical expenses and the retirement expenses. So all of this stuff is provided in the Act, and I'm assuming the banks are going to require those as well, unless SBA relieves them of that responsibility, which they do have some latitude to do, I'm sure.
Okay. So this was a question that I've got a couple questions. So first of all, when does the 8-week period start? Upon the signing of the note or the signing of the funds? And then is there, do you anticipate for expenses that might have, for example, payroll on a 2-week basis that might be the starting date might be in between, or that 2 weeks the funding date might fall between a 2-week payroll period? Do you expect for there to be proration, or how should businesses expect to deal on the expense side with that?
I would say that to be safe, you should figure that first of all, the first day is the day the money hits the bank. So if you got your money on a Saturday and you're closed, the first day, you're into 2 days by the time you get to Monday. So you're 2 days into your first week. If your payroll period spans the cutoff, which they all will, unless you're just incredibly lucky with the biweekly payroll period, I would imagine that the payroll processors like ADP and Paychex and the smaller ones will all generate reports that'll give you the cutoff dates you need if you tell them. And so I would contact your payroll processor immediately and ask them if they're going to have that capability for you. But until we get more clarification, we have to assume that it's a payroll period that started and finished within that 8-week period. Now, another school of thought is, since all payroll tax reporting is on the cash basis, perhaps you can include any payroll, regardless of period, when it's paid during that 8-week period. And I'll use one example. One client got their loan proceeds on the 16th of April. That happened to be payday. And the payday was for the period April 1st through April 15th. Well, on the cash basis, that's included. The entire payroll is included. On the accrual basis, none of it's included. We simply don't have the guidance yet to tell us. So we're going to have to assume something. So in that client's case, we're assuming that the 16th counts. But it may turn out later that it doesn't count. And hopefully in the next 2 to 3 weeks, we'll start getting some guidance on these critical questions.
So this one seems to be, probably most universal to the group and to folks that are looking at it. So let's say a business doesn't hit that 75% number. Let's say, that in 70% or 65% of the expenses over the 8-week period are in that covered or that qualifying payroll. Will that portion be forgiven, or how is it going to be calculated, say on a $100,000 loan and they only have 70,000 of it in these qualified payroll expenses?
Well, the simplest way to do that is figure out what your covered payroll expenses are. Because remember, this is the Payroll Protection Act. The definition of the forgiven amount says that 75% of the forgiven amount has to be payroll. So if you take your payroll related costs that are allowed, which is the gross payroll, the state unemployment tax, the medical, and the retirement, you add all that up and divide it by 0.75, that's going to tell you what your maximum forgiveness amount is. So then you would apply to the non-payroll portion up to that 100% in rent and utilities and so on.
Okay, perfect. So if people have already made some reduction in forces prior to the funding, so let's say that they got funded on April 20th, but they had done an RAF on April 1st and paid out some severance. Is any of that severance, can any of that be included? Or is, since that was prior to funding, that it's not part of their calculation?
No, it would not be included, but you have until June 30th to rehire. And it does not have to be the exact same employee, because many of those employees may go find other jobs. So when you're looking at that head count factor in the loan forgiveness calculator, if you are able to restore your head count, the FTEs, by June 30th, then you'll be fine.
Okay. And then this is, I think, yeah, this is a good question, because definitely people operate this way. Are any payments made to independent contractors? So rather than have employees that they're using IC for some of that work, are any of those expenses forgivable or included in the calculation?
The SBA explicitly wrote those out of this loan, and they are not permissible uses of this loan, because those independent contractors can apply for it on their own.
Okay, great. And let's see. That is, we're providing hazard pay bonus to staff providing in-person services. It's additional pay in order to continue operations. Related to what is being discussed, can the additional hazard pay be covered by PPP? And I would think yes, assuming that it's still under the annual $100,000 limit, that all that would be covered just as an increased payroll cost.
Yeah, and presuming it's W-2 wages, it would be the same.
But again, it cannot exceed that $15,000 number in total compensation for that employee.
Right.
During that 8-week period.
Perfect. And just so people are clear on the webinar, and that's just it. Paul's focusing on that 15,000 divided by 1/6 of 100 grand, and I'm focused on the 100 grand for the annual compensation. But both of them get to the same math, so that's why you hear us using those terms differently. And so just for folks on the webinar, just to be thinking about that. And then I believe a question here just came in the chat, and I just want people to be clear, because I think, we talk about these numbers and they're a little confusing with the forgiveness and everything else. But the question here is, can the use of the funds can the funds be used for things other than, for other expenses than rent, utility, and payroll? Are those the only three things, or can other expenses be used for this?
No is the answer. So it needs to be within it's very narrow on this loan. The idle loan, which is, the other SBA loan option, is broader if you need assistance, but that currently is closed at this point. We don't know if it'll reopen. But this one is very restrictive to payroll, rents, utilities, mortgage interest, and then the interest on other debts. But be careful on that one.
Yeah. Any other use is specifically prohibited, and that's why we think you might have to pay it back immediately.
And you have to keep in mind those types of uses, if determined fraudulent, would be subject to civil penalties as well to the owners.
Okay, guys, we've talked a little bit about this in terms of that utilities are a use that's allowed. What exactly are they defining as utilities? I mean, I think, all of us know electricity and water, but is internet services, is if you've solar loan, if you have a solar system on your house. But let's take the first easy ones. We'll get to the solar loan in a second. That's the tough one. That'll hurt my head. But what are the covered utilities that are identified in the Act?
Unidentified.
Unidentified?
So they're going with the term, and I would, my personal opinion, one of the things that people ask about is, what about cell phones? Well, to a business, especially in this period, cell phones are a necessary utility. Internet is a necessary utility. So, using common sense, which isn't always a good idea when when you're looking at laws, but they did say utilities, and generally speaking, those would be utilities.
So I think I see a question here in chat, and this might make some sense because people are confused about it. So FTE, full-time equivalent, and so this is a way. So let's sort of take this as easy way. Let's say that, and Paul, I know you said still to be defined, but let's use the conservative way that they're going to define an FTE based upon 40-hour work week, right? So if all of your employees are hourly, you would take, correct, the total number of hours over that 8-week period, divide by 40, and then we would have our full-time equivalents that were on payroll for that period of time.
That's correct.
And so that's a kind of, again, if you're not, if you've been at universities, FTEs really, really well. We talk about them all the time at universities. If you have people who are on salary, how is FTE calculated? Again, let's be on the act, but in sort of normal parlance, how would you calculate out a salaried employees using FTE or in an FTE calculation?
Well, if they're full-time, it's assumed they're 40 hours a week. If they're on a job sharing program, or if they're on some other part-time program, you would use those hours, whatever the normal hours are for that salary that they're being paid.
Okay, perfect. Thank you. Perfect. A question here about rent, which I think is a good one. Any guidance on sort of ancillary activities, whether it is storage or parking charges that people might incur, other occupancy costs that are tangential to sort of the main rent that one pays on a space?
I would say that your rent and your CAM charges are includable. Parking charges, because they include services on the part of the parking provider, that's probably more a service than rent. I would say that's not going to be allowed. That's my interpretation, just using logic. So renting of storage for inventory would certainly be rent. But if it was just a month-to-month rent and there was no lease in existence on February 15, 2019, I don't know if it would be allowed. If you had a month-to-month contract that was in force on February 15th, that probably would count. I'm sorry, did I say 19? I meant 20. February 15th, 2020, you had to have the lease or rent agreement in place.
This is, I'm going to just read this verbatim because otherwise I think I'd butcher it. Is it clear that a PPP recipient can request only a portion of the loan be forgiven? We only plan to use a portion of the expenses outlined as forgivable and pay back the balance. Is it clear that that's possible?
Yes. My recommendation, I'm on a number of nonprofit boards, and one of the boards only approved the application under the circumstances that if it turned out it wasn't needed, we would immediately repay it. And I think that's a good policy. If you go through these processes and you realize you can't use it legally, I would recommend paying it back immediately. Make it available for some other businesses that need the money, because there's a limit here and there are going to be people that aren't going to get it for whatever reason.
I'm going to take this question. It's in chat. So just again, I think that, this will help people think about it because we've kind of gone over the same subject. So again, the question is overtime included? And yes, it would be a part of the payroll expenses. So if you need to pay somebody overtime, you're perfectly fine to do it. I just want to make sure that we didn't misanswer something. So I'm going to read this question again verbatim. The questioner asks, I thought you could use for corporate credit card debit, but that is not forgiven. It sounds like you said that's not allowed. So I guess this would be is that there's a corporate credit card and they've got interest or incurring expenses on that. They want to know whether it's allowed or not, and then ignore the forgiven, not forgiven standpoint. So this would be interest charges on a corporate credit card, I believe.
I'm of the opinion that that would not qualify as a debt.
Right.
That you had a loan agreement in place on February 15, 2020.
Let's see, a couple of fairly narrow ones. And of course, we're going to record this, and Jessica and Paul, I know, might take an opportunity to reach out. We're going to get all your emails, or we got all your emails when you registered. So a couple of these are pretty specific, for example, to the restaurant industries and so forth. So I'm just going to make sure, if there are any last questions, please put them up in chat. And again, somebody asked you, and Jessica, we'll make sure to do that. Somebody asked in chat for the link to the Treasury site. We'll make sure to include that in the email that'll go out to all the registrants as well. Somebody asked about, would Polito be putting out an Excel, a fancy, exciting Excel sheet on this? I know that you mentioned that there are calculators that are out there from law firms, but is Polito thinking about standing up anything for either its clients or the broader community in terms of an Excel tool or something to help people?
We're actually going to launch a consulting service to assist clients with this, because it is complicated, and especially some of our larger clients with over 100 people on payroll, it's a daunting task to go through these calculations. And just like the banks are stretched in infrastructure to handle this, so are our clients. And so I don't know that we'll put something out because it's ever changing. And if we put one out today and then some guidance comes out 3 days from now and it renders it incorrect, then we've got some bad information out there, and I'm a little uncomfortable with that. So, we'll come up with some tools that we'll utilize to assist our clients or anyone else that needs our help. But I'm not sure that we want to be in the position where we're putting something out that may not stand the test of time, given the way these regulations are being changed.
I think I understand this last question, and then we'll wrap it up, folks. And again, the webinar we'll send out a link to everybody. We'll put it up on the SDNEDC.org, our website, and it'll be on the homepage and identifiable for folks to do. But so we talked a lot about getting up to the 75%. Let's say go beyond 75%. Let's say that somebody gets a PPP, again, $100,000 PPP, and that they've got payroll expenses that are all qualified, that have hit the FTE requirement, that they're all good there, that they've made the calculation. All those people made under $100,000 for the year, or $15,000 for that 8-week period of time. Can that entire amount be forgiven?
Yeah, so you can certainly exceed 75% of the loan forgiveness on payroll. You just don't want to go below it. And then just to clarify on something real quick, you can certainly pay your employees more than that $15,000. So if your employee makes more than $100,000, we're not saying you have to reduce their pay. That's just the amount that will be forgiven is capped at that $100,000 mark.
And let me tell you something, that's something which I learned today, which was new, and the eyes went open. But I think that I'm correct, and I don't know if this matters to anybody else on this call. Probably nobody else on this call cares about it. But I know the first round C6s were excluded C6s are still excluded, aren't they? I know we were going to try and
Yeah.
get them in. Yeah, darn. That's too bad, folks, but that's okay. We're doing all right. Let's see. And then just last thing, which is some people ask about this, so I'll just make sure we're good on it. Taxes. So FICA, Medicare, all those things. How does that fit into the calculation?
So federal taxes are not included in, that's just the employer portion. Anything that's employee withheld is actually wages. So that's, you don't worry about that. But the employer taxes, the only thing that's permitted is the California or the state payroll taxes, such as your state unemployment.
Okay, good. Perfect. Well, I think yeah, I think that we've got, the rest of them sort of begin to get into pretty specific sorts of things, but I think those are the really generic ones. I want to thank, first of all, I really want to thank Paul and Jessica for this. We had over 125 people registered. I know maybe some people were disappointed and were unable to get on. Again, the webinar is going to be made available. And I don't know, I might twist their arms and see if I can get Jessica and Paul to come back here maybe in another month. And as people sort of are working through this process. Again, this is the second of these webinars that we've done to try and bring value to North County's small business community. And then I just did want to put on people's radar screens that May 28th, we always do an annual economic summit. We're doing it virtually this year. So we've got a number, we're kind of mixing it up. So we're going to have a number of economists come in and really talk about both a 1 month, a 3 month, and a 12-month outlook for thinking about North County's economy to help people really make those plans and so forth. So registration should be up and ready to go by the end of the day. And again, May 28th, which we're going to do at 10 a.m. Paul, Jessica, thank you guys so much. Thanks everybody for joining us here today. And everybody have a safe and healthy rest of the week.
Thank you, Eric.
Thank you.
Bye.